Hey guys, it's Robert H. from Bearable Traders. Just wanted to do a quick recap of 2 trades I did today. But before we get into that, I'm going to talk a little bit more about trading psychology and sticking to your rules, which I discussed earlier in the week. I know that sticking to your rules is easier said than done. But one approach that I picked up in trading in the zone is to focus on 1 to 3 goals a day, just to make things more manageable, because a lot of you probably have a list of 2 dozen rules that you're trying to follow, and the human brain, it doesn't work like that, especially in an environment like the stock market where you're watching all these numbers, all these movements, and it's just really hard to focus. So if you can choose 1 to 3 goals, write it on a post-it note, review it in the morning, close your eyes, picture yourself accomplishing that goal or sticking to that rule. And even in between trades, if you take a winner or a loser, just pause, look at your goal, make sure that you didn't violate the goal or the rule, and for the next trade to try to focus on that. And that's really the only way you can achieve it, because there's no way you can do 15 different rules and try to internalize those all at once. It's just not possible. And the 3 basic rules that you should have to keep you in this game long term is 1, your entries. Make sure that you are not chasing. I obsess over my entries because, as you saw on the DKS recap from earlier this week, it came back, the pullback tested my entry and forced me to exit half my position. If I had gotten in 2 or 3 cents earlier, I would have avoided that and I could have caught the entire move. And as we'll see in the Intel trade here, if I miss an entry by a nickel or a dime, I'm not going to chase it, because it's going to distort the risk to reward ratio. Something that's a 2 to 1 can quickly become a 1 to 1 if you miss the perfect entry. The second rule is a stop out, and that's what I discussed earlier this week. If you can stop out on a dime and just make it very mechanical, no emotions, the more times you do it, the easier it'll become. And that is the key to this game, because if you can keep your losers small and preserve your capital, you will survive the learning curve. And finally, number 3 is risk management. Only take the right share sizes based on the price action, your stop loss, your account size, and just keep those numbers close to you. Even before the trading day, try to memorize, how many shares can I take with this amount of stop loss? Say 50 cents, then you automatically know this is the maximum amount of shares I can take. And risk management is critical for day trading, because if you believe in what Mark Douglas says about the 5 fundamental truths of what day trading really is, which is you are the casino and the odds are stacked in your favor as long as your strategies are 50% or greater. And the goal is to stay in business as long as you can, because you're going to take winners, you're going to take losers, but as long as your winners are greater than your losers and you're right more than 50% of the time, and then it's all gravy. So those are the 3 basic rules you should really try to stick to and keep. Again, just keep a post-it note, review those every morning. One trick that I found to help me stick to my rules is to use fear as motivation. And I got this from the Daily Trading Coach. Well, I was actually doing it before I read the book, but fear is a very important emotion, because it's raw, it's primal, right? It's wired into our brains. And if you can channel fear to scare yourself straight, to stick to your rules, it's very powerful. So something like, make sure to stop out because last time I didn't stop out and I lost X amount of dollars. Just sear that into your memory. Don't forget it. And for longer term goals, something like, I want to be a day trader full time. I want to make this my career. So to counter that, you need a very strong fear to keep that rule in check. And I joke about this in the chat. I call it the cubicle boogeyman. You remind yourself that if I don't follow my rules, I'm going to end up back working in a cubicle. And for everyone, that might be something different, right? If I can't, day trade, then I'm going to end up who knows where, right? So the cubicle boogeyman, that I keep that as a constant reminder, and I try to bring it down to a micro level. Say, if I can't stop out of here, I'm going to end up in a cubicle. This trading station is going to morph into a cubicle. And that fear as motivation is really helpful. Okay, so that's quite a long rant here. Let's get into the trades. The first one is Intel. I missed the orb at the open. This was beautiful. This would have been a great orb. I missed it. By the time I looked at it, it was above VWAP, about 5-10 cents above the break of the opening range here. Look how small this candle is. Small wicks, everything. Just the perfect orb setup, right above VWAP. So I missed it, and then it just ran. It just ran on me. It's like a dollar move. I wasn't discouraged though, so I kind of just kept an eye on it. I thought with this type of strength, it's probably going to have to pull back, and if it can stay above VWAP, it might be a good trade to the long side again. I think it's at not all-time highs. It might have been higher during the dot-com bubble, but it's at recent highs, 52 weeks at least. So shout out to my homeboy Paul S in the chat. He shorted it here, right at the top, and wrote it down on this wave during the retracement to VWAP. So that was a great trade, Paul. I waited for this ABCD. You guys know I like these ABCDs. So I put my stop loss here, right when it bounced off VWAP. I knew this thing was coming back strong. Look at the wick, the bottom wick on this. So I put my stop here. I was waiting for a new 5-minute high. As soon as that came, I went long. And obviously every other trader was watching this move, and we just quickly ran up here. My target was 57 whole dollar, and it got there momentarily. I got distracted. I should have scaled up much more at this level here, and it couldn't get any higher than that. Tried here, couldn't make any higher highs, and it kind of made lower lows. So I just wanted to get out because I knew that we're probably going to come back and test the 9, which we did here. And it took quite a bit of, I think it's back at 57, but it took a few hours to get there, so that's not worth holding. And as you can see, this is my very first trade of the day at 10:20 a.m. That's what is that? That's 55 minutes or 50 minutes into the market. Because our watch list was pretty big today. There was some movers, ANF, Lulu, MU fell off a cliff, but I just didn't really like it, and I didn't like any of the setups. The risk to reward wasn't there, and kind of I was trying to stick to a rule that I violated yesterday. So yesterday I hit max loss because I wasn't picky enough with my setups. About half my trades weren't A1s, and I made that a rule for today. I said you're only going to take A1s, and if that means not trading today, then you're not going to trade today. So there wasn't really any clean moves that I was able to catch. Obviously, Intel was a clean move, and Lulu was a great opening range breakup, which Paul S took again. So shout out to Paul. And I just said to myself as the time kept ticking a lot during the day here, I said if nothing comes, I'm just going to walk away. Black, right? Because black is better than red. But lucky enough, I was able to catch this move at 10:20. So on to the second trade, which is PBR. PBR didn't really do much at the open. We watched it for an orb, but the price action just wasn't there. Order flow wasn't there. Time and sales was kind of stagnant. But what happened here at around 10:15, 10:20, some news broke out, and there was a huge catalyst. I think the CEO resigned, and there was just a massive sell-off. Everyone in the chat was just saying, wow, what's going on with PBR? What's going on with PBR? And I missed this. I normally don't like to catch these parabolic drops because you never know what's going to happen. I always like to wait for the consolidation here. And this is exactly what we saw. So this is, I called this before the move happened in the chat. I saw that it was doing a bear flag. And if it loses this 5-minute low, it's going to probably collapse again. So this is a bear flag. Some people call it a reverse ABCD, basically the same thing. So I went short, as you can see in the 1-minute chart. I went short and anticipating the collapse of that, and we kind of just went sideways for a few minutes here. And as soon as it lost that new 5-minute low, the bottom quickly fell out, and just sort of covering on the way down. Based on the share price, I took a pretty large size. So I was happy with this kind of 30-cent move that I got here. And on this candle, it tried to reverse on me. It didn't make a new 5-minute high, but I got out. Normally I would hold some, and if I had held some, look at this drop I would have caught here, all the way down to 9.20. My entry was 10.86. That would have been a $1.60 move, and even if I only had a few dozen shares left, that would have just been an incredible move to catch. But I was all out, and another signal that I saw for this before it collapsed was the level 2, which is what Andrew teaches us. Look at the size of these bids. what was the price here? It was at 1084. Price was 1084, so it hadn't collapsed yet. But the size of the bids, I kept 800. So 800 times 100, that's 80,000 shares. And this is 260, 26,000 shares. So those are huge. And as soon as I saw those, I thought to myself, well, okay, this thing's once it breaches this, it's gonna collapse, which it quickly did. So again, that comes from Andrew's teachings, and big shout out to Andrew for that. Those are my two trades, and if you guys are still watching this video, I kind of want to take the opportunity to go back to trading psychology for a bit here. Today in the chat, some people mentioned, they asked for some recommendations for books, and obviously the two big books are Trading in the Zone and The Daily Trading Coach. So Trading in the Zone, I always I vouch for it, and I always say that this book is a prerequisite before you start trading real money. You have to read it at least once before you go live. And the Daily Trading Coach is a requirement for after you lose money, because you're going to lose money when you first go live. And the difference is that in between these two books is that Trading in the Zone, it tells you what you need to do, how you need to think. But it doesn't really give you any kind of action items or exercises to get to that point. And I think that the Daily Trading Coach by Dr. Brett Steenbarger is very good at that. It's more of a self-help type of book. I call it the Tony Robbins for traders. And it kind of, he talks about a lot of the same things that Mark Douglas does in Trading in the Zone, but he gives you exercises and action items and tips, over 101 tips on how you can achieve that, steps to take to get there. And that's why I call it a self-help book. Because what we're trying to do here as traders, it's an uphill battle. We're working against ourselves. Our minds are programmed to sabotage our day trading. Some of the emotions and the logic that we've learned and picked up in life are absolutely going to destroy us when we trade. And that kind of leads into the second point. Sometimes when the markets close, I ponder on the psychology, and I kind of just I reflect a lot about my own trading, and I ask myself, why is psychology and the emotions of day trading so important, and why do so many people struggle with it? And I believe that day trading is one of the only times in our lives where we have absolute freedom to do whatever we want. When we were children, we had our parents there. When we went to school, our teachers were there. And we go to work, we have a boss. When we get married, we have a spouse. And there's always someone there to have checks and balances. And even in the grand scheme, society and the social norms will always keep you acting right until it doesn't, right? And then sometimes you see this mob mentality and riots where people just have out of body experiences and just go ham, right? But day trading is kind of like that. There's no boundaries, and for most people who have never experienced that, which is pretty much everyone on the planet, that type of power and freedom is toxic. It corrupts, basically, right? So power corrupts, absolute power corrupts absolutely, and this is what we see in day trading. Without any checks or balances and hard rules, most people just can't control themselves. You get drunk off the power that you can do, right? You average into a stock because your brain tells you that's what you need to do in order to minimize the losses. But if someone was standing over your shoulder, they would say that's the dumbest thing you could do. But no one is standing over your shoulder, so it just basically corrupts you, and that's what we're working against as day traders. You have to reverse all these habits and all these concepts and just basically all these traits and qualities that we have that help us in our day-to-day lives but actually work against us in day trading. And that kind of leads me up to the second point about consistent day traders and mentors, and who we watch and who we idolize, who we try to become, right? So people like Andrew and Brian, and I kind of look at them and I say, they weren't born like this. Nobody's born with the right qualities for day trading. These skills and attributes and this discipline that they have was built over time. through repetition and perseverance and failure and picking yourself back up and, just surviving the learning curve, right? But they weren't born like this. And it took a lot of hard work to get there. And another thing that I noticed is that if you look at all the successful traders, all these people on YouTube and, even in our own community, people have different strategies. They're trading on different time frames, different indicators. Sometimes their indicators are even conflicting, like the level 2 stuff. Andrew says some other traders are teaching it the opposite way. And everything's just, there's no two traders that trade alike. But all these successful traders have one thing in common, and that's they make money. So the fact that they make money means that they must have something else in common, and I think that's self-control and self-discipline. That is what it boils down to. The strategies, the technicals, all these things they can be different, but it all boils down to that discipline. If you can reach a level of that these traders have made look easy and is now second nature for them, then the other stuff, the technical stuff, that'll take care of itself. It all boils down to conquer those habits and to stick to the rules and just develop this consistent pattern of following rules and internalizing it. So that's my epic rant for psychology today. And those are my 2 trades. So everyone have a great weekend, and thanks for watching.